Overnight, the US stock markets have sold off up to 2% on the SP 500, and this, of course, has led over to some weakness on Bitcoin and cryptocurrencies. Along with some of those massive news headlines, the market is starting to seem extremely fearful. So let's take a look at where the price charts are at right now, and where are some of those indecision points, those pivotal points where the market could invalidate a bullish setup. Make sure you've liked and subscribed to the channel. Quick shout out to our Discord over here. This is where all of our members are posting their trade just within the last 24 hours. You can see the profits that have been made here, 80% on Sol, 80% on Doge, 50% on Sol. This is part of the free Discord that you guys can get access to over here. So go and check this out over here, TIA community. And if you want to start trading cryptocurrencies with our community, check out the link in the top of the video description for our free trading workshops. All right, let's take a look at that first piece of major news before we get into the traditional markets and then across into Bitcoin and cryptocurrencies. Everything is starting to fall into place for March. We're seeing that extreme fear coming into the market. Now, just in terms of the headlines, Silvergate's shiny hinges have rusted as the crypto bank plans to shut down. Of course, this was part of the news earlier on where we saw that fall on the 3rd of March here, that 5% drop. Market went sideways for a few days, and now we're seeing this next drop here, 6%. So it could have been said maybe it was a little early to be calling that this was all we saw for Silvergate. However, what I'm paying particular attention to is just how far this move goes in comparison to our previous extreme news event. This is the FTX collapse. You can see just down here we had 25%. That's over the 2 days. If we take it from the peak of the move, it is around 28%, all the way to that bottom on the 9th of November. Looking at what we currently have, if we take it from the peak so far to the trough, we have approximately 17.5%. So the move has gone down $4,200. In this case, it was nearly $6,000. If this move was to replicate what it did last time in terms of an extreme news event to get down to $6,000, that would be around the $18,000 level. And if you've been following the channel, you know this is that particular zone that we've been looking out for March. March, we weren't expecting to be a big boom month. Like we talked about for February, we're looking for some sort of sideways, potentially a pullback, potentially a slight increase on the price of the peak for January. It happened to do all three of those things. You can see the peak of January was around 23,800. February basically went just a few percent higher here, 5, 6%. It also had a slight pullback, and essentially it was in a trading range. But we don't typically see the market boom month after month after month coming out of a low. 2019, different story. But for now, we don't typically see the markets boom so heavily after that point. And if you're following the channel just 2 days ago, this video right here, the least amount of views, the most amount of information in there, it's on the channel. Go and check this one out. It's over 60 years of data looking at where lows come in the market. Okay, so we can be macro bullish looking at the market continuing to go up, but there is going to be pullbacks. There just has to be pullbacks. And the key thing here is that I've been trying to get across is where does this low come in? At the moment, from what we're seeing with the indicators, it looks like we can expect a higher low. That is a strength piece. So looking at this previous low here, this is November, and then the move here in December, January, and a move up. This is the low to break. But for now, we weren't expecting much to take off like a boom train. I'm macro bullish based on what we can see here on the charts. But in terms of the next low, this is the key area now. This is where the shit gets real. And we see the bears come out of the woodworks. I've been talking about that a lot. When this next down move comes, whenever that may be, it seems to be now, they get extremely loud. They will be wrong. The bears will be wrong. It doesn't matter. We have to flip. We're traders. But the bears will be wrong if the market lows anywhere above this previous level of between 15 and around 17, 18,000. So between 15 and 18,000. If it lows in this zone and then moves away. The bears were absolutely wrong, the macro bears, because the market did not break down. That essentially is a higher low if in fact it does form. Now the bulls will be completely wrong if the market breaks down past this 15,000 and holds below these levels, causing the market to go down for many, many more months to come. So they're the two major narratives at the moment, the extreme bull case and the extreme bear case. And at the moment, the extreme bears are having their days. You can see this here because each day is a down day, and essentially people search for bad news when the day is down. So this is the next stage we have to look out for. Where does this low form? Right now, we're seeing a slight pause at the 50% level, around this $20,000 level, 20,000 and a half. You know, this has been on the charts for a very long time, 20,700. To the downside, if this continues to fall, we have our support levels at around 18 and a half thousand. There's nothing new there that I'm giving you. This is the same thing that's been on the chart for many, many months now. In terms of the log down trend, we're still above that right now. Hopefully we get a bit of a bounce, a squeeze out, and then a hold above. This is for the bulls. For the bears, they must hold under the log down trend and under the 18K zone. Get into the 15 to 18K zone. They need that market for Bitcoin to get into that zone in order to push this further down. That would basically be the start of the invalidation to this leg out of the November low. But for now, things are still holding up. We're at 19,900. So taking a quick look back to the macro events at the moment, traditional stock markets, some real estate stuff as well, you can see here that the market essentially has done 2% down overnight, but it's still above the 50% level at 38.55 and is still holding above that first support level here at 3,800 points. Remember, to the downside, the bears have to get extremely loud. It's all across Twitter, and the headlines that I'm seeing out there are very, very bearish. It's that next swing for the hopes of the market capitulating and dumping like what happened in 2008 with the GFC and potentially 2001, 2002. But I remind you again, after this video, I'll leave a link to it at the end of this. Go and check out this video right here, looking at over 60 years of history of where these lows form. It was almost a playbook time and time again. We had the lows around the June area, the October area, then a March area, and these were extreme events. This really does help understand where these lows come into the market. So go and check this video out after that. Apart from the market coming to test 3,800, potentially around 36 to 3,700, there's nothing left that is different here. It's still within a 10-month trading range, and it's just trying to find its feet. In terms of the US dollar, it's finding a slight support zone above the previous resistance. So this is going to be good for the dollar to be pushing up higher. But like I maintain, this is most likely at this stage, based on the charts, based on the longer term picture here, looking at our weekly and our monthly chart, looking likely that it's a bear market bounce. So basically a bear market rally. You can see this move itself is overbalancing anything in this entire run up. And that overbalance leads to extreme weakness. We do have to get some bounces, and it's great that it's found a support level at a previous support level, 50% at 101 and 102, previous tops, previous bottoms. So it's all forecastable in terms of the support coming into the market. So for the US dollar, what we could look out for next is a potential move up to try and test some of these high levels, 106 to 108, see how it performs, what happens. If it gets rejected, then we'll look to lower prices again and the downtrend resumes. But this will happen over many, many weeks. Of course, we're on a weekly chart here. So with all this extreme fear in the background, is now a good time to be buying Bitcoin or altcoins? Let's take a look at those charts after our quick word from our channel sponsor, New Brighton Capital. For our Aussie viewers, if you already control your own super or have already made the decision to set up an SMSF, New Brighton Capital specialize in crypto accounting for self-managed super funds. Check out the link in the description where you can book in your free 20-minute consult, and be sure to use promo code Pizzino for a $200 credit off your SMSF accounting fees. So should we be buying altcoins right now? The Fear and Greed Index says the market is fearful. This is typically a time where a lot of people want to be buying. The one thing that really surprises me is that people will run to the gates to sell their Bitcoin or not be buying Bitcoin, but they will be so fast to try and buy altcoins. Obviously, altcoins have a bigger return. However, many of the altcoins will basically go to zero. If you are interested in trading, go and check out our link, top of the video description. There's the trading workshop there. Like you can see here, plenty of big profits here. DYDX, 100% on the shorts here. More Bitcoin shorts, 37% profits. So if you are interested, check out those links in the description, because this will give you a head start on trading for altcoins coming into any sort of altcoin season. But we've been following this chart here, going back to our fear and greed index. This was the emotion that the market broke out of. Surprise, surprise, we're looking at 40 and around 30, this area, this zone here for the market to drop back into. That's precisely what it's doing. The reason for that I'm looking at those areas is because of these higher lows that the market is forming as it continues to climb out of significant low areas. Now, if we start to get some drops further down at these lower extreme areas, but price for Bitcoin remains higher than those previous lows, then essentially we have a bit of a divergence in what the market is feeling and what investors are actually doing. So what would that look like on the chart? Well, if we continue to drop here and it remained higher than our zone, so I can probably draw that like this, and it remained higher than the zone here, yet our fear and greed index dropped to levels that it saw at those previous lows, then you know that the fear is unwarranted for what the smart money is doing. They're buying up at higher prices because potentially we're getting a higher low form, but the fear is extreme. So that is another signal to say, the time is now. Let's start to buy while the blood is in the street, while the extreme fear is in the street, yet the price is remaining higher than it previously was. That's basically a higher low. That's the exact bullish structure that you want to see. Provided it remains above a few other key levels, our 18K and the log downtrend, that is going to be a good start. As soon as we start to get back above the 50%, it's looking even sweeter. So above 20.5, 21,000. As for altcoins as a whole, this current peak that happened in February was still below the August top. So this is the total cryptocurrency market cap. Bitcoin reached its August top, broke it by a few bucks. But for cryptocurrencies, the majority of them did not make their August top. And the key point there is breaking the August top was a sign of strength. It's not the only sign of strength that we require, but it is a sign of strength. And for the majority of altcoins, for example, Solana, which has a lot of trading volume, a lot of people are interested in trading Solana, and it's been a great short lately, it didn't get anywhere near the August top. So that was a very clear sign of weakness for a longer term position. But for short term trading, like I've shilled twice, this will be the third time for our trading workshop down below. Trading is a different story. Trading has proven to have very profitable moves to the upside. And now the breaking of key support levels, getting rejected at key resistance levels has been a great trade to the downside. So for Solana, is it time yet? Personally, not for me, because the lows were getting lower. You can see the November low here, and then the December low, which was lower than the November low, is quite different to what happened for Bitcoin. As you can see for Bitcoin, the tops were just touched. The previous top was 25,250. Back in August was 25,210. So although it's a clean double top setup at the moment, it hasn't been confirmed yet for the breakdown of the double top. So that's why we still remain cautious of the downside and bullish to the macro upside, because these levels still hold. The 18K is still in play right now. And therefore, in contrast with the altcoins for a longer term position, by all means, go ahead, trade, do what you need to do with your plans. But for a longer term hold, we need to see the market form a low and hoping for a higher low than the previous low, and then start to move in the opposite direction. Otherwise, it could spell disaster for further downside for many of these altcoins, which were unable to get back to their August tops. That's what you want to see. Like the likes of Solana didn't make it. The likes of Cardano did not make it. The August tops are well and truly far away from them at 60 cents here, only managed to make it to 40 cents. Currently at 30 cents. It was putting in new lows in January when other markets like Bitcoin and ETH were putting in higher lows. That's the difference between a weak, longer term position and a strong, longer term position. Obviously, in the short term, I've probably said it about 7 times now, there is plenty of great trading opportunity, short term, days to weeks to the upside, and again to the downside. Make sure you smash the like and subscribe to the channel. I'm going to leave a link to these videos at the end of it. This one is a cracker of a video looking at the macro cycles. You don't have to do anything apart from just watch the video. In terms of a too long didn't read, Bitcoin, there's the November low, the SP 500, there's the October low. Basically, nice and simple. When you have your trading plan, keep it so simple. If you believe that we're around the low levels, start accumulating. If you think the market's going to drop below those lows, probably 40% from the current-ish levels, 30 to 40%, then you're better off selling everything and waiting for that low to come in. It's as simple as that. That's the way I like to keep my trading plans. For now, I think we're around those lows like I've been talking about since June. This area here, this is probably the biggest accumulation area I think we're seeing. Now it's up to the market to confirm whether this was the accumulation zone that we've all been waiting for. Let's see how it performs over the next couple of weeks. March is that key area that we're looking for a pullback. I'm a little more positive for the macro look to the upside coming later in this year, but of course we have to have a pullback and give the bears a little bit more hope, and for the bulls maybe a better opportunity to be getting into the market. Stick around for the video popping up on your left-hand side. Like and subscribe. I'll see you guys back here very soon. Until then, have a great weekend or end to your week, and I'll catch you at the next one. Peace out.